So today's topic is the exit strategy. And today I'll be sharing 12 lessons with you guys. So the first lesson, first key takeaway from the book of Robert Kiyosaki, Increase Our Financial IQ on the exit strategy is the beauty of the exit strategy on Robert's 300 unit apartment is the use of leverage to become even richer. Second, so instead of selling the property and facing substantial capital gain taxes on the profit from selling that property, Robert pulls out the money, okay, by refinancing. So in other words, you do not have to sell the property if you want the money. The other way is to get money is to refinance it. When you refinance it, then you're able to avoid the capital gain taxes on the profit if you do sell it. Third key takeaway, Robert is able to do this because able to do what? To refinance, okay? He is not selling it, but he's able to do refinance. Why? Because Robert has increased the value of the 300 unit apartment. How did he increase the value? They made improvements, either interior improvements and exterior improvements, landscaping, putting in pools or upgrading the pools, interior, putting hardwood floors, taking out the carpets, putting in granite countertops, stainless steel appliances. So that's the improvements. And second, they have increased value because of the management. When I say management, that means it is the expenses are down and your income is higher. Okay? So these are the two ways where they have increased the value: improvements and management. So therefore, when they have done the increased value through improvements and management, the bank recognizes this increase in value, and Robert and the team are able to borrow against their 300 apartment units. Fourth lesson, by leveraging the property's value, okay, the word leveraging and value, Roberts was able to pull money out of the property tax-free. So you're able to pull money when you do a refinance tax-free. And versus if you sell it, you have to pay capital gains taxes on your profit, right? So by refinancing, they're able to pull out the money tax-free. And they have improved operations, which more than covers the higher mortgage payment through higher income. So you have to remember that when you do a refinancing, you're borrowing more money. So that means you will be paying higher mortgage payments. Now, because you do have improved operations, you are able to afford to pay the mortgage through your higher income. Fifth lesson, by borrowing versus selling, okay, you're not selling, but you're borrowing, refinancing, you're able to get the down payment back tax-free, and they get to keep the assets. So you still own the property and you get money tax-free. Sixth lesson, at this point, the property's income is an infinite return. Infinite, I love the word infinite, and I did discuss this in a previous topic. Now, infinite because they have no money in the property. Okay, they still own the property, but their money, their capital, initial capital, they were able to pull out So that's why they have no money in the property and they still receive income. And this is what it's called, the ultimate leverage, because now you have infinite return. Seventh lesson, let's say after 5 years, okay, they're able to refinance the 300 apartment units and pull out 4 million tax-free. 4 million tax-free. This is how it would look on the income statement. Now again, income statement needs to have a balance sheet. Everything needs to balance. So for income statement, you have the income column and you have the expense column. Now in the income column, we remember the word 360,000 increase in income, the number 360,000. Now this 360,000 is an additional increase in income. And if you remember from the previous videos recordings, this additional income was either through washer and dryer implementation, exterior improvements, right? So that's why you're able to increase your rent. And so by increasing the rent, just let's say, for example, $25 per month per unit, and you multiply that to 12 months, that's how you will come up with a 360,000 increase in income. And with this income statement, you get $4 million tax-free. The bank will give you this. This is when you refinance the property. Now let's look at the expenses, because when you refinance the 300 apartment units, now you do have higher mortgage, and this 280,000 in additional interest payment at 7% interest at the time when they wrote the book. So now this is in addition, okay, $280,000 of additional interest payment. Now let's look at the balance sheet. Like I said, everything needs to balance. So the balance sheet has your asset column and your liability column. The asset, you still own the 300 unit apartment, you never sold it. Your liabilities now, because you did refinance, right? So you took out, the bank gave you $4 million. So that $4 million is an extra debt on your part. So you get the $4 million, and that's how you're able to pay back your capital. And that's how you get the infinite return, because you get this $4 million back. Cash, you got a cash out refinance here. So to break this down, the $4 million refinance dollars goes back to the investors, and it pays back all the initial equity and then some. And the beauty of it is that you still own the property. You still maintain control over the 300 unit property. Now the increased mortgage payment of 280,000. Now you may ask me, how can we pay the 280,000? Remember why we're paying this 280,000? Because we cash out refinance $4 million. We got $4 million of refinance money. So now we owe 280,000 more, right? From this $4 million. So this 280,000 is paid for by the 360,000 increase in income. Like I said, this 360,000 income is an additional income. And this additional income is an increase of $25 per month in rent. Okay? Times 12 months. Times your 300 apartment units. And that's how you got the 360. Now you also have to factor in the vacancy over there, right? So that's how they got the 360,000 of additional income. an increase in income, which can easily pay for your 280,000 of debt payment. So this is the equation. The 360,000 increase in rental income minus the 280,000 increase in interest expense. That's from us getting the $4 whopping million refinance money, more money on your pocket. Now you have a net of 80,000 left over, right? Your leftover passive income. So this 80,000 is the infinite return because the investors have received back all the initial investment, all the money, all the capital they got back from that $4 million refinance money. Okay? And they still own the property, so they still receive the cash flow every month. And this is now free money. That's why it's called infinite return, because the capital, their money is out from that property, and yet they still receive the money, the cash flow. So that's why it's called free money, infinite money. The investors get the $4 million back and move on to purchase another property from that $4 million. Wow. This is an example of using control and using leverage. This is an example of getting rich according to the rules of new capitalism. Remember, there's an old capitalism and the new capitalism. So this is according to the rules of the new capitalism. So capitalism based on the use of debt to become richer. Debt. Now remember, there's a good debt and there's a bad debt. What we're talking of debt here is good debt, an asset and not a liability. 11th lesson. So rather than work hard to get out of debt, okay, rather than work hard to get out of debt, as those who follow the old rules of capitalism, new capitalism means work hard to find ways to get into more good debt and use more leverage. So those are my key takeaways, 12 lessons that I learned from the exit strategy from the book of Robert Kiyosaki, Increase Our Financial IQ. So